Bitcoin just had a pullback, and a lot of people are now worried that we are going to start to break down and go down to lower prices again.
Bitcoin's recent slide has left investors on edge. Is this the start of a deeper dive or a fleeting dip before a monumental surge? If you're wondering whether to sell, hold, or buy more, you're not alone. In today's analysis, we'll uncover the real reasons behind Bitcoin's pullback, the critical support levels you need to watch, and why a looming tsunami of liquidity could propel prices to new heights. Stay tuned to find out what's really happening in the crypto market and how it could impact your next move. Bitcoin has recently experienced a pullback, causing concern among investors who fear a potential downturn to lower price levels. However, it's essential to understand the underlying reasons for this pullback and what it signifies for the future of Bitcoin and the broader cryptocurrency market. On the 4-hour time frame, Bitcoin has shown a notable decline, breaking through key support levels. This movement coincided with the opening of the Chicago Mercantile Exchange, CME.
On the 4-hourly time frame, you can see that we had a decent pullback here. And why did we see this? Well, we actually saw this right as the CME Bitcoin futures opened in the United States. So you can see right here on the 15-minute candles, we saw the institutions start to dump Bitcoin right here. And this is what has actually led the downwards trend for Bitcoin here in the short term.
Bitcoin futures in the United States. Institutions began selling off Bitcoin, as evident from the 15-minute candles showing a sharp drop initiated by institutional traders. This sell-off has contributed to the short-term downward trend we are currently observing. Despite this decline, Bitcoin is attempting to find support along the orange trend line, which has historically acted as a critical support level. If Bitcoin fails to hold this support, the next significant level to watch is the orange box region, starting at around $63,750. This zone has previously provided robust support, and it's likely to do so again should prices continue to fall. Analyzing the probabilities, it's reasonable to believe that Bitcoin may not drop significantly below the $63,600 to $63,750 range. Therefore, selling Bitcoin at this juncture might not be the best strategy, especially considering the minimal distance, approximately 1.2%, to the next major support level. For long-term investors and those confident in Bitcoin's future, this pullback could present a buying opportunity rather than a cause for panic. It's important to note that any dips in Bitcoin's price can be viewed as opportunities to accumulate more, particularly in anticipation of a massive influx of liquidity expected to enter the markets. This impending tsunami wave of liquidity is projected to propel Bitcoin to much higher prices in the near future. On the 2-day chart, Bitcoin failed to close above a critical trend line, which is a cause for caution. Historically, when Bitcoin has risen above this orange line without sustaining momentum, it has subsequently retraced to lower prices. This pattern has occurred twice before, and it seems to be repeating. However, unlike previous instances, there is optimism that Bitcoin will resume its upward trajectory sooner rather than later, potentially avoiding a significant downturn. Looking at traditional markets, they are performing relatively well, indicating that Bitcoin's decline isn't correlated with broader market movements. This decoupling suggests that the current pullback is more about internal market dynamics within the cryptocurrency space rather than external economic factors. Another factor contributing to the current market sentiment is the amount of leverage present in the Bitcoin market. Open interest, which represents the total amount of leverage, has risen to $19.1 billion. Since March 2024, surpassing $18 billion in open interest has only happened 6 times. Each occurrence has typically marked a local top for Bitcoin, leading to a subsequent price correction. The high level of leverage indicates that traders are taking on significant risk, which can amplify price movements in both directions. While this could be a source of concern, it's also a normal part of market cycles. High leverage can lead to liquidations that cause sharp price movements, but it doesn't necessarily indicate a long-term bearish trend. Investors should exercise caution, but also recognize that such market dynamics can create opportunities. Turning our attention to global markets, significant developments are occurring, particularly in China. The Chinese stock market has surged, with the Beijing 50 index experiencing a record 15% intraday jump and trading volumes reaching unprecedented levels. The Chinese government's commitment to improving policy efficiency and injecting liquidity into the markets is fueling this rally. Brokerages are operating around the clock to accommodate retail traders, and the enthusiasm is reminiscent of market conditions in 2020. This surge in Chinese markets is indicative of a broader trend of liquidity entering global financial markets. As China injects liquidity, it's expected that other major economies will follow suit, leading to increased capital flows into various asset classes, including cryptocurrencies. This influx of liquidity is poised to have a positive impact on Bitcoin and could be a catalyst for significant price appreciation. In the altcoin market, several tokens are scheduled for substantial unlocks in the coming months. For instance, in October, SUI is expected to unlock $15 million worth of tokens. Zeta Chain will unlock $40 million. Immutable X is set for a $60 million unlock, and Aptos will release tokens worth $92 million. These unlocks could introduce volatility into the altcoin market, especially if there isn't sufficient buying pressure to absorb the new supply. Investors should exercise caution with altcoins during this period, as the increased supply could lead to price declines if demand doesn't keep pace. It's crucial to be selective when investing in altcoins at this stage of the market cycle. While the broader market is in a bull trend, it's still early, and not all altcoins will perform equally. Focusing on projects with strong fundamentals, real-world use cases, and active development teams can mitigate some of the risks associated with token unlocks and market volatility. There's also news regarding FTX, the cryptocurrency exchange that faced significant issues leading to financial losses for many users. On October 7th, a final court hearing is scheduled for the reorganization plan, which could pave the way for the distribution of approximately $17 billion to affected users. Initially, distributions may prioritize smaller investors with claims up to $50,000. This development is positive for the market, as it may restore confidence among investors who suffered losses due to FTX's collapse. Moreover, the injection of these funds back into users' hands could lead to increased investment in cryptocurrencies, potentially boosting market prices. Another sentiment indicator to consider is the Bitcoin Fear and Greed Index, which currently shows that the market is in a state of greed. High levels of greed can sometimes precede market corrections, as overly bullish sentiment may lead to inflated prices that are unsustainable in the short term. However, given the anticipated influx of liquidity and positive developments on the horizon, this indicator should be interpreted with caution. While it's essential to be aware of market sentiment, it's equally important to focus on fundamental factors driving long-term growth. In summary, while Bitcoin's recent pullback might be unsettling for some investors, it's part of the natural ebb and flow of the market. Key support levels are holding, and the broader outlook remains positive due to several factors. Number 1. Institutional dynamics. Activity on the CME futures market indicates that institutional investors are actively influencing Bitcoin's price. While this can lead to short-term volatility, it doesn't necessarily dictate long-term trends. Number 2. Market leverage. The high level of open interest suggests significant leverage in the market. While this can amplify price movements, it also reflects active participation and can lead to opportunities during corrections. Number 3. Global liquidity. The surge in China's stock market and the government's liquidity injections point to a broader trend of increased global liquidity, which can have a positive impact on cryptocurrencies. Number 4. Altcoin dynamics. Upcoming token unlocks may introduce volatility, but also present opportunities for strategic investments in solid projects. Number 5. Regulatory developments. The resolution of issues like the FTX reorganization plan can restore investor confidence and potentially lead to increased market activity. Number 6. Market sentiment. While the Fear and Greed Index indicates greed, it's important to balance this with an understanding of underlying market fundamentals. For investors and traders, the current environment may present a favorable opportunity to accumulate Bitcoin and other cryptocurrencies in anticipation of future price appreciation. As always, it's important to conduct thorough research, manage risk appropriately, and stay informed about market developments. If you're interested in trading and taking advantage of these market conditions, various platforms offer substantial deposit bonuses and promotions. Engaging with reputable exchanges can provide additional benefits and enhance your trading experience. In conclusion, while short-term fluctuations are inevitable, the overall trajectory for Bitcoin and the cryptocurrency market appears promising. Staying informed and strategically positioned can help you navigate these movements and potentially capitalize on the opportunities they present. Thanks for watching. If you found value in today's video, be sure to hit the like button and subscribe so you don't miss out on future content. Drop a comment below with your thoughts or any questions, and I'll make sure to respond. And hey, if you know someone who would benefit from this, share it with them. Don't forget to turn on the notification bell so you're the first to know when new videos go live. Until next time, keep pushing forward and take charge of your success. I'll see you in the next one.